if you want to write off your car in your business and you're wanting to get the biggest deduction possible, here are the 3 things you got to keep in mind. Number 1, keep track of your business miles during the year. Number 2, make sure you have the highest amount of business miles during the year on that vehicle. And then number 3, if you purchase a vehicle that's over 6,000 pounds, it will lead to a much larger deduction for you, especially in that first year. But none of its weight will have any significance to you if you do not effectively follow steps 1 and 2. Let me explain. If you want to write off any vehicle in your business, you're going to need to know one crucial element before you can do anything else, and that's how many business miles you drove it for the year. So that is why this is step number 1. You need to keep track of the business miles you drive your vehicle. The IRS requires a contemporaneous record, a record as you go of the miles you drive your vehicle for business and for personal purposes. And you might be thinking to yourself, this is such a cumbersome process. I don't have time to write down all these miles and do all this kind of stuff. Well, fantastic for you. There are applications out there to make this a very simple process. One in particular that I know a lot of my clients use is something like Mile IQ. It does a great job of logging all the trips that you have, and you can even go back at weekend, month end, whatever it is, say whether that was for business or personal purposes. So what that means is at the end of the year, you have a perfect contemporaneous log of all the trips that you have and a record showing how many of those trips and what amount of miles was for business. Now, the reason why I want to keep my business miles as high as possible during the year is because that will help me determine what kind of expenses I'm going to be able to take for this vehicle. I have 2 options when it comes to writing off my vehicle in my business. I can either take the standard mileage rate, or I can take actual expenses to the extent of my business use. So the standard mileage rate for 2024 at least is 67 cents per business mile driven. Or I can take my proportional share of actual expenses on the vehicle, such as depreciation, gas, insurance, repairs and maintenance, and things of that nature. But all of this is determined by the amount of use I actually have for the vehicle, which still comes back to the business miles I drove it. So for instance, if I drove my vehicle 10,000 miles in total for the year, and I drove it 7,000 miles for business, that would mean I have 70% business use on my vehicle. I can either do 67 cents per business mile, 67 cents times 7,000 miles, or I can take 70% of all my actual expenses, like I mentioned before. Now, do understand this small caveat. I cannot switch back and forth year after year between actual expenses and the mileage deduction and choose whatever is better. Now, my first year has a pretty big impact on what I'm able to do with my vehicle expenses. If I choose to take the standard mileage rate in the first year, I actually do have the ability later on in another year to switch to actual expenses, but I cannot ever switch back from actual expenses to the standard mileage rate. So when I make a decision on what I'm doing, I should make sure I'm not looking at just the first year, but also what I'm going to be doing this vehicle continuing forward. But as you can see, the higher my business miles are during the year means I either get a larger standard mileage rate deduction, or I get a higher percentage use in my vehicle, which means I get a higher percentage deduction for all my actual expenses. And then that brings us to step number 3, which is the often talked about but rarely contextualized concept of buying a vehicle that's over 6,000 pounds. The reason why so many people talk about buying a vehicle that's over 6,000 pounds in your business is because vehicles that are over 6,000 pounds, generally speaking, are at least going to be eligible for bonus depreciation, which means you could deduct 60% of the value of that vehicle used in your business in the first year. It could be a pretty big depreciation deduction for you. And then some vehicles, like heavy SUVs, are actually eligible for a little bit of Section 179 deduction, $30,500, and then a 60% bonus depreciation deduction in 2024. That means I can get an even larger amount of first year depreciation expense on that vehicle. And further still, if I buy a vehicle that is eligible for full expensing with Section 179, certain trucks and vans, then I can actually expense the entire business use value in my business that first year. But the problem is, many people conflate the idea that because these vehicles are potentially eligible for Section 179 or bonus depreciation or both, they will be eligible. But that's simply not the case. I still have to use that vehicle over 50% of the time in my business, which goes back to step 1 and 2, which is track your miles and then figure out your business use percentage. And even still, they think, okay, well, I used it 51%, so now I can write off 100% of it. Still no, I'm still limited to my business use, like we talked about before, with actual expenses. You got to figure out your business use percentage, and that's the amount you can deduct in the business. For example, if I buy a truck that is eligible for full expensing with Section 179, and the truck costs $100,000, in that first year, if I use it 70% of the time for business, then that means I can take a $70,000 Section 179 deduction, as long as I have enough income to do so, and take that as an expense against my income, reducing my taxes. Which means I still have $30,000 of value in this vehicle that was used personally, because those miles that I didn't drive it for business are personal. I can't deduct those in my business. So even though it was used more than 50% of the time, I still didn't use it 100% of the time, so I can't deduct 100% of its expenses and its value. But this is why steps number 1 and 2 are so crucial to this element and allow you to get the most deduction possible. If I know that I buy that 6,000 pound vehicle and it's going to result in a very large first year deduction, but I need to use it the most for business, that's going to orient how I actually drive this vehicle. So as a recap, track those miles. Get your business miles up as much as you possibly can during the year. And if you buy a heavy vehicle that's over 6,000 pounds, you're going to be eligible for a very large first year deduction, but it's all going to be predicated on steps 1 and 2. So make sure you keep those as your priority. If you're looking for more answers on vehicles and how you can write them off in your business and some of the myths that go along with those, I have another video here which talks about this more in depth and gives a little bit more explanation on the 3 things I just talked about here. So be sure to check that out as well. But otherwise, thanks so much for watching. Be sure to like, subscribe, comment, and hit that notification bell. And be sure to follow me on TikTok and Instagram, where I talk a lot more about tax concepts in a shorter video format. And you can tag me in videos across there as well if you want my answers on things or would like me to respond to certain videos. Again, thanks so much for watching. I'll see you on the next one.